This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. And all of you out there, interesting days ahead, interesting days now for sure. Another stimulus is promised. The market is going absolutely insane today. Happy days are here again. I can hear the song in the background. What do you think? How long will it last? Email us, kl@kerrylutz.com. Right now, we got John Rubino, dollarcollapse.com. John, happy Monday. So you can never have too much stimulus, can you?
Hey, Kerry, more is coming. And even after the one with the checks in it, Biden is talking about a big infrastructure plan that somebody's thrown around the number of $2 trillion for that. So, you know, it's just, the pipeline is just full of newly created currency heading out to the banking system, which interestingly isn't how traditionally governments have responded to rising inflation causing interest rates to go up. This is a new strategy for controlling rising inflation. So we'll see how it works. You know, it's the old ways were kind of painful. So maybe this is a painless way to stop interest rates from going up. We will see.
Well, this is a case of the cure is the disease, right?
Mm-hmm. Well, yeah, I mean, that's the logical way to look at this, but apparently that's not how it's looked at in Washington. They seem to think that easy money fixes literally everything. And if interest rates are going up, we'll create a bunch of new currency and give it to the bond market and see what that does. So we'll see. I don't know. This has all the hallmarks of a train wreck where we throw gasoline on a fire in the hopes of putting the fire out and are shocked when the fire gets bigger. So I don't know, we'll see. But, Warren Buffett just came out and said that bond investors are in for a really bad decade going forward. In other words, he's predicting higher interest rates. So then the question becomes, how high can interest rates go before they short circuit all these asset bubbles out there? And I don't think it's too much higher. You know, last week, I mean, this week stocks are up and everybody seems happy again and everything. But last week was 5 days of extreme turmoil in the financial markets, in part because interest rates were starting to go up. In fact, the 10-year bond yield spiked briefly to 1.6%. It's back down into the 1.4s now, I think, today. But generally, the kind of parabolic move in interest rates that we've seen lately leads to really bad things. And the financial markets last week seemed to recognize that. So this week they don't, but this could be just one of those impulse moves, counter trend moves that you see every once in a while in a long trend. And we'll get back to being afraid of rising interest rates tomorrow. I don't know, but it is just really funny to see us reacting to what could be the beginning of a 1970s style inflationary interest rate spike with easier money. Yeah. It's really counterintuitive, but I think these guys are still living in the pandemic turmoil past when they should be moving into the inflationary present to avoid a hyperinflationary future, but they haven't done that yet.
Yeah, and the bond vigilantes up until last week have been in total hibernation. They're kind of like maybe in a coma on life support, and all of a sudden they come roaring back, and man, you couldn't have seen a more freaked out market if they had a silver cross and garlic around their necks, you know?
Well, that's because nobody who's in the financial markets now even knows what bond vigilantes are. That's a name that's like our parents talking to us about Benny Goodman or something like that. It's something from the distant past that we don't understand. You know, I mean, if you're a 32-year-old trader on JP Morgan Chase's prop desk, there's never been a bond market that responded badly to excessive government spending in your adult lifetime. You've never seen anything like that. So it's a completely new phenomenon for you. But it used to be, I mean, there was a time when if governments borrowed and spent too much, the bond market would respond by pushing up interest rates because people didn't want to lend money at low interest rates in an environment where the government was getting its spending out of control. That, was put to rest decades ago in the days of Alan Greenspan, maybe even in the days of Ronald Reagan. And interest rates have been going down, 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 no matter what governments have done ever since. Well, now that's starting to change, but I don't think conceptually that most people in today's financial markets really get what it means. If interest rates start to go up, and governments refuse to restrain their spending, then you get this conflict between very big forces. And it's possible that the bond markets are big enough to force governments by going up, by pushing interest rates up, to force governments to scale back their spending, which would be austerity, which we found out doesn't work in a highly leveraged system in the last few years. So then we're in a position where nothing works. If you keep on spending at the rate you've been spending, interest rates go up and that crashes the economy. But if you scale back spending and borrowing, that impoverishes all the people who depend on that spending and borrowing, and the economy crashes. So, we're heading for a time when nothing works. And then we're heading for a time shortly thereafter when people realize that there's nothing left that works. And then all hell breaks loose, and that was always the end game here. But it looks like we're tiptoeing into the place where this stuff actually starts happening. And wow, own gold when it does happen.
Twilight Zone. Hey, so the vigilantes, if they're still out there, maybe they have some sway and maybe they don't. They certainly haven't done anything for the past 40 years. When rates, it's like 40 years when rates have been in this downward trend. And you always wondered, well, how low could rates go? And we found out during the March crash and during Europe with negative interest rates, negative yields, negative real yields. And I guess at some point they got to go up, but they're still extremely low by any historic measure. 1.6 is nothing. I think the average was around 5% for decades, right? 3 to 5%.
A normal 10-year yield is 5 or 6%. But here's probably what they're going to do. When, let's say the 10-year yield gets a 2 handle pretty soon. In other words, it goes up above 2%. And that spooks the markets. Instead of scaling back spending, in other words, addressing the reason markets are freaked out, probably what they'll do is they'll have the Fed create a bunch of new currency and use that to buy 10-year bonds at a lower interest rate. So in other words, they'll do like Japan did for a long time there, where they'll peg the 10-year yield and just offer to buy as many bonds as it takes to keep the 10-year yield down at that level. And that worked for Japan. They were able to basically peg their long-term interest rates along with their short-term interest rates and keep the yield curve where they wanted it. But that was in an era of zero inflation. And now we're starting to see prices rise in a lot of different areas. Industrial commodities are up, and of course, stocks and bonds and real estate are up. House prices are going crazy in the US. Lumber is up like 20% in the last few months. So if you're building a house, that's something like $18,000 extra to build the average size new house these days. So prices are rising and transport costs are up, which also feeds back into consumer prices. So, this is a very different environment from Japan 5 years ago, when they had no inflation at all, so they could peg their interest rates wherever they wanted to. Well, if inflation is starting to pick up, and let's say it's in the 3% range, which could easily be if copper and iron ore and lumber prices feed into the CPI, then the government trying to peg the 10-year bond yield at, say, 1.25% is going to be a really interesting spectacle, because if inflation is twice that, that means the real yield on that bond, the real return on the bond, is negative 1.5%. And traditionally, sharply negative real yields cause a lot of trouble out in the financial markets. So, we'll see if it happens that way again. But that's what we're headed for. So we're at another of those decision points where we have to decide to do what has been traditionally done, or attempt to violate the laws of finance and see what happens. So I think we'll do the latter. We'll try to violate the laws of finance, and then we'll just see.
Hey, and speaking of the laws of finance, ARK fund is under attack with massive redemptions, huh?
Yeah, well, in every bubble, there are a handful of money managers who just load up on the bubble assets and make fortunes and are hailed as geniuses. So Cathy Wood, who runs the ARK fund, is that one this time around. And they basically they own Tesla. That's their biggest position, and they bought more during Tesla's recent correction. And I think they're exposed to Bitcoin big time, and they own a whole bunch of small biotechs and a lot of other kinds of tech stocks. These super volatile stocks that in hard times will crash, but in good times will soar. Well, last week they crashed, and the ARK fund complex saw a lot of money being pulled out. Their redemptions just spiked, which means if that keeps up, they have to sell the stocks in their portfolio in order to raise cash to satisfy the redemption request, which means they will be pushing down the stocks that they have bid up, which makes their net asset value go down, which makes everybody sell their funds, which makes them have to sell more stock. So you get this feedback loop that potentially could be the thing that blows up the tech bubble. That almost happened with, for instance, long-term capital management back in the day during Alan Greenspan's day, when they had something like that happen in the bond market. So this would be in the nosebleed part of the tech stock market, and it could easily happen. We'll see what the next few weeks bring with the ARK fund, but that's the kind of thing that, well, it does happen at the peak of every bubble. So the question is this the peak of this bubble? And is ARK the fund that we'll remember for decades to come as the one that blew up first during the bursting of the most recent bubble? So we'll see. But it's one of those things to watch, because it'll be a really interesting spectacle and really meaningful if it happens, because it's systemically dangerous if a fund like that blows up at the very peak of a bubble.
Absolutely. And it won't be the first time, as you said. Cathy Wood's kind of the Pied Piper of this speculative bubble market. And we know what happens to Pied Pipers. What happened to him in Peter Pan? He didn't fare too well, did he?
No, he wins. He takes all the children away and eats them or something. I don't remember what he does with them. But
well, that's what happens when you follow the Pied Piper, right?
Yeah, it's the children that you want. So the followers of the Pied Piper are the ones with the problem. Yeah, that and that happens at the peak of every bubble. So it's just a timing thing. Like, is this the peak? And if interest rates are going up, then it's very possible that that's the pin that bursts the bubble, and then you see all these other after effects. So you know what? It's about time. This was a bubble that went on way, way, way too long.
Oh,
and
still got some more air left in it here before it totally deflates, John.
Well,
will no doubt.
The governments are, they're ready, willing, and able to create unlimited amounts of new money. So that's the wild card here is, okay, this is a bubble. It's towards its end. Valuations are crazy. It could pop at any time. But here comes $2 more trillion, Is that like another year for this bubble, or 2 years? We just can't know until after the fact. So
enough. I have a feeling, but you never know. Stupidity can go on for much longer than you ever dreamed possible, or something like that. Anyways, so hey, Bitcoin, Citibank says that it's going to become the global trade currency of choice. Could it possibly displace the SDR?
Well, if you're comparing any fiat currency to each other, it's sort of a Hitler-Stalin argument, the SDR is basically just a basket of fiat currencies. So it's completely possible that people would prefer Bitcoin to just another fiat currency, which is all the IMF's SDR is. But it's interesting to see Citi come out and say that Bitcoin is going to become the trade currency of choice on the international markets, which is, I love the idea of private sector money being chosen by free individuals to displace these government-run fiat currencies. I love the concept, but we're getting way ahead of ourselves here, because what will the central banks of the big countries do when Bitcoin starts actually becoming a threat? If when you've got banks like Citigroup coming out and saying, yeah, Bitcoin's going to replace the dollar in international trade. Do they think that the U.S. government and the Fed are just going to sit there and go, oh well, I guess we lost. Let's just cease to exist as monetary entities here, or are they going to fight back? And if they fight back, what can they do? And those questions have to be answered before Bitcoin gets to be the world's reserve currency. And I think that's a really interesting battle coming up, because the U.S. government could just say, well, Bitcoin's illegal now. It's like heroin or something like that. If you have it, maybe you can have it. We might legalize possession, but you can't do anything with it. So,
deal it.
Possession with intent to deal is a crime now. And then what happens? Nobody really knows the answer to that question. It might be that the private sector just steamrolls these big central banks and just gets into Bitcoin and says, hey, there are 10,000 of us out here in the international banking community using Bitcoin. Go ahead and arrest us, see what happens. And that's how it happens, but maybe not. It could be that if the European Central Bank and the Bank of Japan and the US Fed all declare Bitcoin an illegal form of money, that they have some power over what happens to it from then on. And we just don't know that, so the idea that it's going to become immediately the world's reserve currency means it's too soon. We have to get through all these reactions. The empire has to strike back first.
Well, let's just look at it this way. And I don't think you'd argue with the fact that the bankers run the world, right? Pretty much.
Yeah, pretty much. I mean, if we include Bill Gates and George Soros and a handful of other people like that in the banking community, yes, they run the world.
They run the world. Okay. Yeah. Now, if we look at Bitcoin, what's its greatest strength? It's also probably its greatest weakness. You can't create any more after 21 or 2 million Bitcoins, and a bunch of them are lost already, 25%. So effectively, you'll have a fixed money supply. And you know what that means? That means no inflation. And once you take the inflation factor out of it, the banks, they might be playing nice now. Oh, it's greatest thing since sliced bread. But the banks, for their very existence and continued escalating profitability, must have inflation or they're dead, because then the whole thing relies on debtors paying back their debts in lower value currency units. And in Bitcoin, and this is why they've been so adamant against the gold standard and everything else, you can't have a money supply that contracts, because then people have to pay back their loans in higher priced currency than what they borrowed. And the whole thing is anathema to the banking system as it currently stands. So yes, if the banking system falls, Bitcoin might have a seat at the table. But the way it is now, you can't have a deflationary currency underpinning all the world's inflationary policies. It just can't be. And to think otherwise, I think, is really overlooking the central asset, the major thing, why we have fractional reserve banking, why we have fiat currency, and why nobody wants to change it. And that's because there's a lot of people getting super rich off of inflationary economic policies. So until this cycle ends and until there's a consensus that we got to go to something else, Bitcoin is not going to be the world's reserve currency. That's not to say some crypto with a fixed, or if you could come up with an algorithm where it grew 2% a year for the world's population or something like that, might supplant Bitcoin. But if you want to destroy the value of Bitcoin, go expropriate Coinbase and a couple of the other big Bitcoin banks. effective banks, repositories, and you'll see it go away real quick.
Yeah. Okay. You made a lot of good points there, and they're all valid. We can't go from here to zero inflation, which is what would happen if Bitcoin was the replacement for all the big fiat currencies, because it would blow up all the debts that are out there that need to be rolled over, or that require inflation in order to be paid back. So, yeah, there are a lot of reasons why we're way too early in this process. And then, the technological replacement of Bitcoin that you brought up. What if somebody comes out with something, or what if one of the currencies that are already out there, the cryptos that are already out there, turn out just to do the job better, and Bitcoin gets replaced? I don't know. There's a lot of questions that have to be answered before we get from here to there. And the thing is, we're liable to be trying to answer those questions during a period of chaos, when the big fiat currencies are starting to fail, which is to say inflation is starting to spike. And that's roiling the financial markets and the political systems of the whole world. So, a lot of this stuff is going to take place in a really unstable environment, which kind of leads you back to precious metals. They're the ultimate stability because they're physical. From a Bitcoin fan standpoint, the physical existence of precious metals is actually a drawback. But in a world that is veering out of control, physical existence and stability and longevity are good things. So I think that a lot of money is going to flow back into precious metals when things really get out of control here, for those reasons.
Flowing now.
Yeah, you can't take it on an airplane very easily, but if it's sitting in a vault right here, it's super safe. It can't be messed with, can't be hacked, none of that stuff. So.
Yeah, and they are increasing the world's supply by about 2% per year, although that's going down a bit. Again, we have a deflationary currency that we're looking to kind of bail out the inflationary currencies. I don't know how this thing actually works, John. Nobody does. Like you said, uncharted territory, but we're here. We're going to be here soon. Going to be real interesting to find out. Make sure you go over to dollarcollapse.com, stay up on John's latest writings, sign up for his newsletter, sign up for ours at financialsurvivalnetwork.com. We will pick up where we left off on Monday, John, and no doubt there will be no shortage of topics.
Okay, Kerry, see ya.
This is the Financial Survival Network. Now more than ever. The Financial Survival Network.